Hi, I'm Iman Bacodari,
And I'm Gabrielle Corrao.
and we're the Bacodari team coming to you live from Douglas Elliman headquarters in Midtown Manhattan. Our clients and customers have been asking us many questions, and we wanted to answer the most frequently asked questions about the state of the market that's been going so far this year and where we're going with the state of the market. So let's get right into it.
So Iman, how are you finding the real estate market?
The biggest trend we've seen is that luxury is back. The luxury market has performed much better than it has over the last couple of years, and we can attribute that to the high wage earners all being called back to work. During the pandemic, they were all called away from the offices to work at home, and now largely they're all back and they're continuing to come back. Like for instance, the Chase building, after being in construction for several years in Midtown Manhattan, has just finished, and it's stunning, and their entire workforce is called back. So these high wage earners moving back into the city are needing places to live, and they need multiple bedrooms. They wanted to move into luxury buildings, and we're seeing the numbers be affected by that. And the FAIR Act actually even furthered that, because the FAIR Act stands for Fairness in Apartment Rental Expenses. In May of this year, when they enacted this rule, they forced landlords to absorb the broker fee, which was previously being covered by tenants. And what landlords did was just take that fee and add it into their rental prices, which right after the FAIR Act was enacted, rental prices jumped 15%. So with the scarcity of rental apartments available, in addition to higher rental prices, the sale market became a much better place for the luxury clientele to be investing in.
Yeah, so like you said, Iman, a lot of families are coming back to New York. They need homes for their kids. They need, everybody's going back to school. So we're actually seeing a resurgence of the co-op market, believe it or not. The co-op market has been pretty soft the past couple of years. It's taken the biggest hit in terms of pricing. And now what we're seeing is people looking for those larger spaces. So let's say they have 3 kids, they need 3+ bedrooms plus, staff room. So the co-op market is providing that inventory. So for example, in the co-op building where Paul Newman's penthouse recently traded, that apartment achieved 30% above the asking price.
Wow.
And in the same building, we have our listing. It's a Central Park facing 9-room apartment. It's got about 3,300 square feet, lots of space, and we're asking $6.5 million. The same apartment, if that were to be in a condo building and not a co-op building, would be about $12 million. So, people are really seeing the value again in co-ops, and they're willing to go through, renovations and updates to have the space and to have the value.
Very interesting. Gabrielle, with the recent rate cut, what impact do you think it will have on the market?
Well, sellers are going to start bringing their listings to market. They already are. They understand that buyers have lower rates now. They have access to financing that they didn't have before. So there are going to be more listings on the market, and therefore more buyers shopping. So that being said, Iman, what role do mortgage rates and cash buyers have in the market right now?
Mortgage rates have come down to the lowest they've been in a while. The banks already priced in this rate drop that Jerome Powell was supposed to do, which he did. So we've already seen the prices get more attractive on the mortgage side. We're generally a 50% cash market in New York City, so half of our sales are all cash regardless of where mortgage rates are. But last quarter we were 69%. Now that we're seeing this rate cut environment, it'll be interesting to see what percentage. It may drop the amount of cash sales. More people will want to come in the market and want to take bank financing.
I agree. And how are you finding the market for buyers?
The buyer's market is really fascinating to me right now, because I'm out with buyers, I'm shopping, and the properties they want to see, we're going to open houses. These apartments have multiple offers, and my buyers are feeling a little out of sorts, because they're like, we thought this was a soft market. We thought the interest rates were high and we have all this buying power. Meantime, they can't get the ones they want. And meantime, there's apartments that are on the market, but they're undesirables. They don't want to see them. I'm sending them properties like, this is too overpriced. This one has high maintenance. So I'm seeing this divide where the apartments they want to see are all locked in these bidding wars, or they're getting hard to buy. Meantime, the undesirables, which are not bad apartments, but for one reason or another, they don't want to see them, they're not getting any action. So going to the other side of the coin, how are you finding the market for sellers?
Well, I'm finding a very similar situation on the seller side as well, because you know, we are working with a number of sellers right now that know that their price is high, right? So they're just not getting any action. And we're seeing a trend where instead of people going to see the apartment, even though it's a little bit above their budget, they're just not coming at all. So we're getting 0 showings. For example, we have a condo listing that we just sold at the asking price in 35 days because it was priced well. So the seller listened to our recommendations and we sold it quickly.
It sounds like there's a lot of precision pricing that needs to be done in this market for both buyers and sellers. Wow.
And regarding the new development market, what are you finding?
Well, new developments are an interesting segment of the market because they're priced a lot higher than resale properties, co-ops and condos that are the conventional market. They're definitely for buyers that can afford it, but in that market that buyers can afford it, right now there's a decent amount of inventory that has come on the market, and there's some interesting inventory that's coming to the market. But in the last, it takes about 5 to 7 years for new developments to be developed and brought to market. And in the last 3 years, there's pretty much been little to no land purchases and new development projects that have been initiated. So there's going to be a big scarcity of new development product moving forward. So what we have now, it's a good time to buy because these properties are on the market, they're priced well, and they're ready to move. The one thing is the developers won't stop the race to find the new cool amenity to attract buyers. Now it's all about the paddle courts, about the pickleball courts, the Turkish hammams. I mean, there's no limit to what these developers are willing to create for the luxury buyer to come and buy these new developments. Now, our new developments, if you look at it on a worldwide scale, are actually not expensive. If you're looking at the global market, we're one of the most attractive markets for new development. For the caliber and the quality of the products that we're offering for sale, New York, it's also a great country and a great city to buy in. So, you know, New York is a great place for new developments.
Everybody wants a piece of New York.
Absolutely. So that concludes our market discussion, and I wanted to thank you all for watching. If you have any further questions about anything we talked about or anything else that is interesting you or questioning you about real estate, we are here at your disposal. Feel free to contact us through DM, and thanks for watching. See you soon.
Thanks, everybody.